Alrighty, folks, we're going to have a little bit of an advanced conversation about cost segregation, bonus depreciation. We're going to use someone that I have actually personally used their services and recommend it. But we're also going to have some words of caution because I don't know that it is right for everyone in every situation. And more importantly, I think if you are an LP in a syndication that is going bad, you are going to have a tax surprise. So I want to make sure you are aware of that. So let's welcome David to the show. How you doing, David?
I am wonderful. Good to be
Awesome,
back.
man. So, yeah, you've been a big part of the One Rental at a Time family. You've been with me for over 2 years. You've helped a lot of people with cost segregation and bonus depreciation. Let's first define both of those. Then
Okay.
we'll talk about individuals and how I've used it. And then we'll just talk about the little tax surprise that might be coming to some people, unfortunately. So, what is cost segregation and bonus depreciation?
It's funny. My wife just got back from a trip and she said, I was sitting in the airport trying to describe to people what you do. And she said, I think I got it down to like 8 minutes. And I said, what I do is I provide a service that helps real estate investors save taxes. That's less
There you
than eight
go.
minutes.
That's
So
yeah,
by,
that's that.
by accelerating their depreciation, we do a study that'll help them accelerate the depreciation on the portions of their building that can be depreciated over a shorter life than the full 27 and a half years or 39 years, which when you accelerate the depreciation, you increase the tax deductions. We can use the Tax Cuts and Jobs Act to get them bonus depreciation for now.
Yeah, yeah. So I want to be a little clear on this. In my opinion, right, as an old accountant, you're you're not increasing total tax deductions. You're just changing when they're absorbed or used or leveraged.
There are a number of ways to depreciate a building.
Correct.
Most everybody just uses, because it's simple, straight line depreciation
Straight
over
line.
the
Same
course of the
number every
property.
year. It's easy, easy peasy, done. Yep.
However, the IRS or the tax code says you don't have to do it that way.
Right.
You can actually use what they call accelerated depreciation.
Mm-hmm.
So a good portion of that building, everything non-structural in the building actually can be depreciated at 5, 7, or 15 years,
Correct.
depending on what it is. But you don't know what those components are without a cost segregation study. So we
Correct.
identify all those pieces and parts in your building uh, through what is known as an engineering-based cost segregation study, which is the only type I would recommend.
Absolutely.
Um, we provide all new depreciation schedules to their tax professional to just apply it to their taxes, which gets them with bonus depreciation, which means you can right now you can take 80% of all of that shorter life property the very first year.
Right.
Huge tax deductions, huge tax savings. Ultimately, you're going to depreciate the same amount, but if you
Correct.
understand the time value of money, you know, then it's an incredible deal.
No, I just wanted to be very clear on that because again, the total depreciation is the same number if you hold it for the totality of the term. You're just moving a portion of it, and I would argue a decent portion of it forward, which again, time value of money is more available. It's not. I just want to be clear. Some people think it's extra depreciation. It's not extra. There's nothing extra about it. It's just sooner.
Also, you can't depreciate the current value of the property. You can only depreciate what you paid for the property. So, because I've had a lot of people say, "Well, I only paid 200,000, but now it's worth like 6."
Yeah.
Yeah, well, that's nice, but
Congrats. Yeah. So
depreciate.
the next thing I want to talk about, so a little education there. I want to be very clear. I have used your service and will use it going forward because it makes sense for my where I'm at in my investing career, real estate professional, all of that. I think there's a lot of talk in the world about maybe it's not right for everyone. Maybe there's an income threshold where it doesn't make sense to do it. Why don't we just talk about as individuals? I think it warrants having a conversation, certainly, but maybe straight line is right for some people some of the time.
Well, there's a number of different aspects that you need to look at.
Mhm.
Long-term rentals are different than short-term rentals.
Oh, very true, right? Short-term rentals are considered a business, correct?
Correct. So a short-term rental is depreciated at 39 years.
Mm-hmm.
A long-term rental, in order to use the depreciation against your total income, then your W-2 income or whatever, you must qualify as a real estate professional and you must be materially involved in your property.
Mm-hmm.
And there's rules for that.
Mm-hmm.
A short-term rental does not, and it's very hard, and I know you will agree, it is very hard to get the real estate professional designation.
Oh yeah, I could never even consider getting it until all I did was real estate.
Yep.
Absolutely. Right until I was retired for
So
sure. Yep.
for most people, I will tell them, hey, look, if you've got a W-2 job, you're not a real estate
Not
professional.
a real
Now,
estate professional. I would agree.
wife might be, and if you
My
file,
exactly your spouse. Yeah.
but with a short-term rental, since it's considered to be a business, it's a 39-year depreciation, and you don't have to be a real estate professional to use it against your total income. You
Yeah,
only
this is an important point. I think there's a lot of people that don't realize the IRS looks at short-term rentals very differently. It is a hospitality business, not a passive investment. And because of that, a lot of the rules that you hear at real estate meetups are all long-term oriented. They don't apply or they're different as short-term rentals. So one of them is depreciation. Yeah, absolutely.
you can. It's a um, cost segregation with bonus depreciation is almost a no-brainer if you own short-term rentals, because
Yep.
all you need to do is be materially involved in your property, which is you spend 100 hours in the year and more than anybody else, or you spend 500 hours in the year, no matter what, you're
Mhm.
materially involved.
There you go.
And then you can use it against your W-2 income, no matter what it is.
Yeah, I think a lot of people don't realize that. If you're a short, like a lot of people, high W-2 earners like I was, we were stuck in the long-term kind of carry forward, right? Because we just could never write off our losses. In that case, straight line was just as good as anything for me, right? Because I was in the game for 10 or 15 years. It just didn't matter. But if short-term rentals, if I had chosen to do that, it could have been game changing. I could have wrote it off against my W-2 income. That's
And
different. That feels different.
rentals, if you're not a real estate professional, then it kind of depends on how much passive income do you need to write off, because
Yeah,
it'll only apply against your passive income at that point.
correct.
But if you've got a lot of passive income, which a lot of investors do, um, so every case is different.
Yeah.
And my recommendation is just call me.
Exactly.
Just call me.
Exactly. That's what I did, and it was beautiful.
And if
Yeah.
I don't know the answer, to your specific tax situation, I'll work with your tax professional.
Yeah. Absolutely.
We're not against the tax professionals. We don't go around behind them. We work directly with them. They can't do this, what we do.
Right.
And
No.
so there are a lot of tax professionals and CPAs that refer their people out to me. I work with a large real estate investor only CPA firm that you're more than aware of.
Yeah.
Uh, and they send their clients to me. We figure that stuff out. We
Yeah.
determine what works. You know,
Yeah.
I can run a.
And I got to tell you, you've been on the channel lots of times, and that's why you're back. The people that use your services and reach out have said nothing but great things. So we'll hit your number again at the end, but why don't you give it one more time? If somebody wanted to reach out and say, hey, let's schedule a call and talk about my unique situation, what is it?
You can call me at 770-224-8504. I'm in the Eastern time zone in Atlanta. Or you can text me at 770-367-8091. I'll gather a
There
few
you go.
pieces of information. We'll talk about it. I'll answer your questions. And I can run a free
Yeah.
preliminary analysis on any property to see what the cost would be, what the benefits would be, and then we can kind of see how it would apply to you. And if you decide it's not a good deal for you, we'll just part as friends, because I can use plenty of those.
There you go.
But
Yeah.
my heart is the heart of a teacher,
Oh,
and
yeah.
so I love those calls and want to spread the gospel of cost segregation everywhere I can.
So let's close on unfortunately a potentially sad, but a conversation that needs to be had, and I don't think many people are. Uh, a lot of LPs were sold the idea of cost segregation and bonus depreciation as a reason to be a part of big syndications. I saw lots of the big social media people saying, hey, get part of my thing and you're going to get, every dollar you put in, you get year one write-offs. And I heard all of this stuff. It's going to be a problem. We've already heard about a lot of syndications going bust. They're losing their properties. I just wanted you to realize as an LP, if your operator loses the building, I want you to realize the IRS is going to come calling because that is a transaction and you are going to have to pay up for the depreciation. Even if you lost all your money, you could be hit from the IRS for what is it called? It's called cost recapture, or what's it called?
Depreciation recapture.
Depreciation. I just want you to be, I don't want you to be shocked. I want to say this again. You could be an LP in a deal. You could lose all of your money, like that Houston deal, $100 million wiped out, 3,200 units. If you're an LP in that deal, you're going to get hit by the IRS.
Cost segregation is a wonderful thing. Bonus depreciation is a wonderful thing. I'm really, really cautious about syndications and that, for that very reason, because you don't know and you don't control and you don't.
No, you're not in control, guys.
And so you can do it, but you got to go in with your eyes wide open and you got to be very, very sure that that syndication is not going to go belly up.
No, I mean, David, I got to tell you, there are people right now that put 100 grand in that Houston deal that blew up, that lost the 100 grand, that don't realize the IRS is going to come knocking for another 60 grand or whatever it is that they wrote off.
The sad thing is, if that was somebody's first foray into real estate,
they're never coming back.
Never going to invest in real estate again. And it's a shame because it can be great, Yeah. But yeah, so I'm a little bit nervous when somebody tells me this is a syndication.
Yeah, no, I've been warning people for the last year and a half.
Even small properties, it used to be that cost segregation companies wouldn't touch a property under $1 million.
Right.
We can do a property with a cost basis of $150,000 and up.
Yeah, you did one for me at 250, so it was very beneficial. Yeah.
So it's worth a look. See, anyway, it's worth taking a look at and getting a free estimate on, getting your questions answered, having a serious conversation about where you are in your tax journey, and whether or not it'll apply to you.
That's exactly why you're on this channel, because I know you have the heart of a teacher and you're willing to have those unique conversations. So if somebody wanted to reach out to you via text, what is the number so they can get that scheduled?
Text number is 770-367-8091. Please mention that you heard me on One Rental at a Time. That's important so that I know that these are valuable.
There you go. He takes care of the ORAT family fund, people. That's why he comes back. So let him know you came from ORAT. You want to have a call, that would be very beneficial. David, thank you so much.
My pleasure.